Morning, everyone. Welcome to this morning's edition of the MPC Markets Morning Call, 10th of December 2025. I'm Mark Gardner, captain of Team Silver, and stocks were flat overnight into the Fed meeting, day one of a two-day meeting, but silver absolutely rocketed to a new record, $61. For those of you who watch regularly, you'll know how happy that makes me. Look, I mean, having a look here at the just generally the net changes for the day across the board. ASX was down 0.45 yesterday. That was largely to do with the hawkish RBA. And, you know, the governor was, I think probably, after the sort of flack she copped, one particular journalist, I think about 4 months ago, saying, "Do you feel like you've betrayed the Australian people for not easing?" Was really was very much on the front foot about inflation yesterday. I watched a lot of the press conference. Realistically, the questions were so unbelievably loaded. Just looking for a soundbite. I mean, the Fin review, even, which is on the more reputable side, it was just kind of ridiculous, to be honest. I think they should just get rid of that press conference. It's like largely a joke, because half the journalists that are in there, I don't think have got they're more. Some of them are definitely from the gossip pages, not from the economics or business departments of the of the newspapers. But there was some comments really that they're saying that there could be a hike as early as February. That's just unlikely. It's just so unbelievably unlikely, and realistically, they really don't just do one and done and then flip it straight away, particularly in the face of what the Fed's going to do, or likely is going to get forced into doing. But I think this is a real lesson for central banks globally, is that I don't think the RBA wanted to ease in the first place. They got criticised for how far they hiked, and they didn't hike as much as the rest of the world. They just got constantly criticised. The property market is not the centre of the universe, people. Unfortunately, Australia has just got this thing where that's what we think, but interest rates affects a lot of different things. But the risk to inflation are now tilted to the upside. That's obviously very hawkish, and there's strong private demand and tight labour force. And look, and that's been caused by the government as well. And it doesn't help that they've come out with these low deposit things, which is pushing asset prices up. Basically, what would go a long way is, instead of a hike, would be the government pulling its head in and just being in line with the monetary policy, not trying to buy cheap votes in a non-election year. I mean, do their actual job. But this seems to be a bit beyond most politicians globally these days. NVIDIA got attention as well. President Trump announced, which I don't know why we're doing White House announcements on Truth Social now. It could resume selling the high-performance H200 chips to China, but the 25% tariff must be paid to the US government. Now, this sounds ridiculous, but this is actually, if these guys aren't going to pay tax, then fair call. I actually like this policy, and there's sort of a number of sort of different options that he had here. Was to ban them, but then China's just going to plow more money into developing their own competitors, whereas these aren't the top grade. The Blackwell chips are not going to get sold to them. I think he's kind of hoping that you just flood the market over there with H200s, and essentially that weakens the Chinese's resolve for developing their own products. Was one of the theories that was put forward that kind of does make a little bit of sense. I mean, this is a bit of it is a very geopolitical game here. It is a matter of national defence, in terms of who is the leader in chips, and not just AI chips. This goes back to when semiconductors first came to be back in the 60s and 70s. You went from missiles missing the targets 90% of the time to missiles hitting the targets 90% of the time. And we're largely, that's a huge advantage in terms of military and defence, etc., as well as cyber attacks and that sort of thing. So, I mean, despite that, really, like Nvidia was flat or just down slightly. JP Morgan was down 4.6. There's probably a story there. I didn't really see too much. There wasn't anything major coming over the news wires about it. It was, but analysts are now expecting a hawkish cut tonight or tomorrow morning. This time tomorrow morning. But realistically, I think the Congress is back talking about healthcare again. That obviously didn't help the healthcare market. That sector down, one of the weakest of the evening. But that's just a nothing market, basically. Fed tomorrow morning, employment tomorrow as well. There'll be many mortgage holders, I suppose, economic reporters hoping for a weak number there to get a little bit of a relief. Broadcom might be interesting tomorrow as well, I would imagine. I'll have a bit of a look into Adobe's potentially tomorrow as well. It's one that we're having a look at, which we think is pretty unfairly dealt with overall. It's every time and this is the downside of AI is, and funnily enough, there's an article on Livewire about this today, which made a lot of sense. Was being contrarian now because of AI is you may as well just walk through a minefield because it really is. It really is making consensus view self-fulfilling. But every time you look up Adobe, it's basically, in the top 5 companies that are most likely to be victim of AI. Whereas when we went and had a bit of a look into it, they actually have quite good AI and better than many of the software, competing softwares that are supposedly going to be the best. The ones that are going to take Adobe down. So and they've got that infrastructure as well. So Costco might be interesting as well tomorrow. Just in terms of consumer demand, given we're not going to get any figures. But yeah, just very much a Christmas market. And look, everything hinges on this Fed. If it's a hawkish cut, we're going to go down. I don't see us getting a dovish cut. My personal view is we get, which is another alternative, is we get dovish rhetoric, but no cut. And they push back on the figures not being released as the reason. And once they can see the data, then maybe there's a cut on the table, but they need to see the data first. That would be what every normal central bank would have done pre, 2015. But we're in a bit of a new world where, playing politics is part of the central bank thing. So, here's my, one of my favorite charts in the world at the moment, silver. This goes back to late 2023, but really, I mean, if you have a look at this chart here, we're under 50, like on the 24th of November, and here we are on the 10th of December, and we're above 60, and doesn't really look like stopping anytime soon. It's just a beautiful thing, but I don't really have anything much more to add there. I just really like looking at this chart, I think, overall. If we do get Fed cut, like that's going to help it again. But I think this at the moment, these pullbacks are just such great opportunities to buy in in silver and the likes of Broken Hill Mines, BHM on the Aussie, Par Silver in the US, and Andean will be pretty good performers today, and they're pretty low, I've got to say. Like when silver pulled back to that $49, $48 mark, Both Broken Hill and Andean got like seriously whacked up, and they haven't gone back to highs. And now this has busted through. This has busted through a new high by by a good 10%. So I would expect those to start playing some significant catch up overall, because for any of the technical analysts out there, that is beyond strong buy on every single time frame at this point in time. Monthly, weekly, hourly, 10-minute, daily, whatever you want to go. So, and there it is there. Silver up 4.67. Gold was up 0.45. Copper was down 1.75, but you look up around about the same for the week. Copper's been on a decent run. Like it probably just needed to have a little bit of a breather. Platinum getting drawn in the tailwind of silver as well. Platinum's lagging pretty significantly now. I think platinum will be the next one to start to play catch up, but generally with these these thematic runs, they tend to be gold had its run, now it'll be silver, and then you'll see platinum and palladium down the line. Copper really different catalysts. To be honest, it's much more cyclical than the others. There is talk of some form of progress in the BRICS pilot program for what's called the unit, which is possibly the dumbest name for a currency I've ever heard. But anyway, I guess that pleases everyone because it's so agnostic. This thing we've had a bit of a look into this, as part of our market outlook for de-dollarization. It's in the pilot stage. It's like a 50-50 if ever come into fruition sort of thing. But if it does, maybe next year, who knows? But at this point in time, they are, it's on the table essentially with this pilot program going. It's going to be on a blockchain at this point, Cardano, but it can very easily switch. But also it's backed by 60% is the BRICS members and their currencies, and then another 40% is gold. So that's just reaffirms that tailwind in gold, and the gold miners will do very well. So here we are here. So these government bonds. So look, the orange one here is the Aussie 10 years, meaning that real rates are significantly higher. We're talking, Aussie 10-year yields were at back at the start of November, were at 4.2%. They're now at 4.8%. That's going to really affect mortgages. Good for term deposits, I suppose. If you're at that end of the market, you can see the purple one there is the US 10 years. So basically, the wider that spread gets, the better the Aussie dollar should do, and it hasn't. I think the Aussie dollar is really undervalued here at the moment. We've got the Fed expecting to cut, massive layoffs in the US, and we've got the opposite conditions here. I would have thought the Aussie dollar is a pretty good opportunity here, particularly if we get a China recovery. And as you can see there, the green line, back in November, that's the 3-year bonds, which is the most liquid bond in that short-term time frame. Most countries do 2-year, but for whatever reason, we do 3. Late October, early November, we're talking 3.6%, and now they're at 4.2%. So that's a pretty significant, rally. Won't be great. Usually not great for highly leveraged companies, for the REITs, or for the banks. Or for highly leveraged companies in Australia, so that's probably something to be able to watch out for. There'll be some weakness in those interest rate sensitive stocks today. Bond yields still heading higher in Japan as well, but yeah, as much as these central banks are getting bullied into cuts, it's only because they're way too indebted, and the likes of Japan and the US. But the reality is that the reason these bond yields are rising, the purple and the blue there, for the US and the 2s and the 10s, is why would you lend the US money? You've got $38 trillion in debt and it's spiraling, and you've got a maniac in the White House. So that's kind of where that rise in yields is, and the blunt instrument of a rate cut. It may not help. particularly in the long end of the bond yields. So won't have the effect that they want. Look, if you want to know more, all of our content's available on Mosaic. It's free to sign up. Go to mosaic.mpcmarkets.com.au or mpcmarkets.com.au/mosaic. Get your 1 month free trial, or you can email us. Follow us on Spotify, YouTube, or Apple Podcasts. We finished off our 2026 outlook, of which we had a 80% win rate last year on the major calls that we had, or to be honest, 11 right. Two were up for debate and one was wrong. But if you want to get your 2026 outlook, a lot more comprehensive this year, a lot more actionable thematics and trades. It will only be available to Mosaic subscribers. There is a free light version of Mosaic that you never have to pay for. No credit card down or anything like that. So, send us an email and sign up today. That wraps it up for today. I'd be careful in those interest rate sensitive parts of the market on the ASX, and just, get long silver. Have a great day. We'll speak again tomorrow. General advice warning. The content presented in this presentation is intended for informational purposes only and provides general advice only. It does not take into account your personal objectives, financial situation, or specific needs. This information should not be the sole resource when making investment decisions. We strongly recommend you seek the advice of a financial professional.